overtrading at its best.
Well, everybody, we've got a good little group with us today, and I think hopefully everybody that's with us today has either had the opportunity to see kind of what we've gone over this last week. This is a series of webinars that we're putting together for newer traders. So we're trying to open up things a little bit more, understanding that we need to cover kind of all sides of the spectrum. And so that's essentially what we're doing, is kind of giving everybody the opportunity to kind of have a starting place, or even refer back to information that we've put together to help new traders get started. And that's what we're doing today. Okay, so it looks like we're about ready to go. I think everybody can hear us okay, and sound looks good. My name is Nate. I'm with TradeWest Forex, and I've been given this opportunity to share with you some things from Mike Swanson, the professional trader and lead developer and programmer for TradeWest Forex. And so it's my pleasure to be with you today. Just to kind of go back over a little bit of some of the things that we did this last week. We talked mostly about Forex terminology. So we went into all the terms that you have to have kind of as a foundation. We make a pretty simple analogy of when you're building your Forex career and what you're doing in your trading career. It's extremely important that you start out with some of the basic things, that everything makes sense to you. When all of the decisions that we're making, the things that we're doing while we're trading, when each one of them has kind of a sequence of things that take place that affect our trading, it's important that we start out and have a good grasp of the most fundamental aspects of trading. That is being able to speak the language. So that's what we talked about this last week. Again, my name is Nate Winall, and I'm excited to be with you guys. So foreign exchange currency trading, as we know it, Forex. Forex is it's so cool from so many different angles and so many different opportunities that it provides. But one of the things that we want to make sure that everybody understands about trading is Forex isn't just like every other trading opportunity out there. It's not like the New York Stock Exchange. It's not like trading options. It's not like all of the other niches or sectors in the financial world. It's very different. So we're going to talk a little bit about how it's different and what really is comprised of each one of those differences, and we're going to go into that. This is 101, and we're here in beginners module number 2. Today we're going to be talking about common mistakes that traders make. So this is there's a lot of controversy about different things to do, how to do them. Keep in mind that the first thing to consider is don't trade money that you don't have, that you can't afford to lose. That's the first and foremost. That's the biggest mistake, in my opinion, that some traders make, because it's going to take you out of the game faster than anything. Because once you've lost money, you really shouldn't have lost, because you shouldn't have been trading it. It dampens the spirits. Every angle of it is going to affect you. So that's first and foremost. Don't trade money that you can't afford to lose. And we're going to jump into several others. Okay, with a little familiarity of terms like we've done this last week, and keep in mind there's a lot more that we're going to go over, but we are officially dangerous. This is a pretty daring guy yeah, he's wrestling with an anaconda. Not necessarily a good idea, but we've got a little bit of an understanding, and we're officially dangerous. Okay, I like to start out with a couple things to get everybody thinking. Habits. Good habits formed at youth make all the difference. Kind of a famous guy named Aristotle came up with that one. And youth, obviously the reference here is that if you're starting out trading, you're a baby. You're at that point where you're a sponge. You're picking up all of these things. You're learning so many different things, and hopefully you're putting the good things in actually action, and you're taking those things to the next step. And the important part to consider when you're talking about habits is habits can really rule and run what we do. So it's something very important to consider. Another one, successful people are simply those with successful habits. A guy named Brian Tracy came up with that. Makes perfect sense to me. The traders that I've seen that have the greatest success are not just folks that are focused and not just people that have a sense of numbers or a sense of that are good at identifying different things, but it's people that have created habits that are going to breed success. And those habits are, one way or another, once you get into it, there's a routine that you're going to find, and if that routine is really filled with successful habits, you will find success trading Forex. And the last one here, right discipline consists not in an external compulsion, but in the habits of mind which lead spontaneously to desirable rather than undesirable activities. Bertrand Russell. So think about this for a second. You hear a lot in trading about discipline, about having certain discipline when you're trading, how you approach things, what you're doing. And it sounds ridiculous because really, from an outside perspective, it's you're sitting down in front of a computer and you know, and you're doing several things and you're carrying out your whatever it might be, your strategy or your approach and what you're doing. But the right discipline consists not in external compulsion, but in the habits of mind which lead spontaneously to desirable rather than undesirable activities. When you get these things that you're learning and you make them habit and you focus on the success that you're gaining from that, that's what you hold on to and move to the next step. So this is kind of the second level foundationally, like we were speaking this last week. And keep in mind these webinars are recorded, and you can actually go back in and kind of watch them. We've sent out emails in the past, and if you haven't received one of those, you can definitely contact us and make sure that we get you the rest of the information and the webinars to be able to watch. Okay, so who can tell us what these are? And I want to see everybody kind of get used to the chat box here. This is an interactive webinar. Of course we're recording it, but we want to make sure that everybody's here can follow what we're doing. That's going to give me kind of a good bearing on whether or not I'm headed down the right direction. So let's see. I had another trader, a gentleman that trades professionally named Bob, and he says the first mistake people make in trading, if they want to lose money, they turn on their computer. That's the first mistake. You sit in front of your computer, you turn it on. If you don't turn on your computer, you're not going to lose any money. There's only one thing I have to say to that, Bob. No pain, no gain, and he knows it very well. Okay, we've got one answer. I'm looking for more. We've got quite a few people now in the room. Let's see who knows it. And it sounds ridiculous. I just want to make sure. Some of you guys would be surprised some of the responses we're going to get out of this. What are we looking at, folks? Okay, I've got a few people that have responded. I'm still waiting before we move on. Before we move on, we're going to get some responses here. Okay, they're coming in. If you haven't responded, I might end up picking on you. I can see names here. What are these things? They're not buttons. However, there are some people that would probably think that those would make some pretty cool buttons for a shirt. Okay, we've got some varying ideas. There's already a good, you'd be surprised some of the responses that I'm seeing. No, they're not Frisbees. Okay. I like this response. Ouch. Okay, well. Okay, hints are going to cost you guys. You guys are taking too long to figure this out. Now, some of you have already got it. That was a joke, by the way. Here's another hint. Here's hint number 1. Shuffleboard, right? Hint number 2. Some of you guys are realizing whether or not you were right or wrong. And, of course, hint number 3. Yes, most of you are correct. And the people that said bombs, I'm going to let it slide. Okay, because that's close enough. We'll take bombs as a... Michael went from ouch to smiley face. That is correct. You guessed it. Now, some people probably know what those are more than others. I've had several friends in the military, and I had the opportunity to get to know one guy that actually, that was his job in Afghanistan and Iraq, is he was one of the people that would actually go around. He was the bomb squad. And as you guys know, the IEDs or what have you, these bombs, these homemade bombs and things that were typically remote controlled and things like that, they had some pretty crazy remote control little things going out there just trying to find these bombs. You can already tell, and many of you can already put 2 and 2 together, the direction I'm taking this is there are a lot of hidden dangers in trading Forex. Trading Forex consists of one decision after another. So obviously, the sooner our decisions are made up of good habits, the sooner we will see success as traders. Very simple. And the analogy, trading mistakes are like landmines. They come in all different shapes and sizes. Of course, the sooner we detect them, the sooner we can steer clear of them. That's what we're going to go into today. We're really going to focus on what kind of things we want to avoid. Now, we might not cover everything today, but we're going to get a good solid second layer on that foundation that we had started last week. And keep in mind, some of the things that we're going to do, we're saving for when we get into the charts with MetaTrader. So once we really dive into MetaTrader, you're going to see some of the other terminology, some of the other mistakes that we're going to talk about. There's more things that we're going to dive into. So not everything is going to be in any one given webinar. So we hope that you catch them all. Okay, to the whiteboard. This is something that I like to call the born winner. I wanted to be a born winner. I will say that. But at the same time, looking back on it, I'm very, very happy to say that I wasn't one. I didn't see instant success. So in proper perspective, the uphill path to success in Forex is much longer to travel than the quick, slippery slopes of failure. Knowing what to avoid is the first step in surviving the Forex markets. Isn't that a scary baby? So people that start out and they get into trading, they have almost instantaneous success, and they feel like they've really figured it out. What's one of the things, has anybody ever had this? How many people do we have with us that were what I call a born winner? You get into it, and maybe you've got an idea as to kind of, what's going on, or maybe you already had some information or what have you. Maybe all you needed to do was check out some news and base some decisions off of that. You had some success. How many of you had that? And if you would, get in the habit of giving me a Y or an N. If it's a yes, no type answer, give me a Y or an N. Everybody just let me know. I'm trying to get an idea as to what our group is like here. Use that chat box. So Y is going to say, that's going to tell me that yes, you had instant success. You were a born winner. And don't feel bad, you guys. If you weren't a born winner, it doesn't mean you're a born loser. Okay, I'm looking for more responses. So either we unmute some microphones and we jump in. Okay, here we go. There we go. Okay, I've got plenty of no's, some yeses. It's a pretty good mix. Well, it looks like the majority of people are saying no. So after little assessment, the overconfident trader concludes that their short-term interpretation of the markets is spot on. They've got it figured out. They got it in the bag. If there is one constant force in trading Forex, it's the unpredictable change that inevitably baffles even a trained eye. from calling the shots. The fact is, learning to trade takes time. There is no substitute for chart time, really. I've heard some people say, well, you can figure this out and you can have it overnight, and well, now that's not to say that you can't take certain strategies and systems and speed up your progress in being able to find these things. That's one of the things that I came across when I actually first met Mike. I was trading unsuccessfully. I really was kind of, you know, I was just barely staying above water. So it wasn't, trading water is not, it's not a fun thing to do when you're just barely trying to save, you know, the capital in your account and you're trying to do everything you can, but you don't see the success. It's pretty much the feeling you get when you feel like you're not going anywhere and you're only going to get more and more tired. So that is the first mistake, is mistaking success with failure, or excuse me, mistaking success with luck. So we have a little bit of luck and we think that's success, but we keep going down the route that we're headed. Okay, the first mistake that some new traders make tend to be one of the most difficult to overcome once adopted. Once you've made it yours, guess what? It's tough to shake that. Fortunately, not all traders are this unlucky. I've seen it time and time again where some of the luck of the draw of fresh new traders falls right into a series of profitable trades, and this is exactly what we're talking about. The next mistake that I find is people get in with some crazy expectations, and we're going to talk about this a little bit later, but big hopes and little results. As in any endeavor, we need to draw upon hope to fuel our efforts. You got to have something there that kind of pushes you from one step to the next, because let's face it, folks, you're going to have failure. You're going to have different things that you run into that may or may not have been poor decisions that you've made. Maybe just things happen and they were completely out of your control. It's one of the first things that you have to accept, is that you don't have control over things. It reminds me, the very first time that I went surfing on the Oregon coast, I had a buddy of mine that was kind of a junior lifeguard, and he's sitting on the beach having a sandwich, and I'm out here paddling, and I'm caught in this current, this rip current that's shooting me right towards these humongous rocks, and the waves, when they break on these rocks, look like they shoot water about 25 feet up in the air. I'm thinking, dead meat, I'm done for. I'm paddling my little butt off, trying as fast as I can to get out of this, and I don't know what to do. I don't realize what it takes. Now, I didn't know that I was in such little water, but he walks out, he puts the sandwich down, he walks out looking at me, kind of nonchalant, like it's no big deal. Here I'm thinking, hey, get out here, I'm going to die. And he walks out like he's some guy walking on water. And in this situation, he kind of was my savior, because he does this. He comes out there, and the water, he's locking his feet in the sand as he walks out closer to me, and he gives me his hand. And I thought it was ridiculous. I didn't even realize it wasn't even up to my shoulders, but I had no idea. So it's kind of an interesting analogy here, but it's one of those. There's so much of what we have is perspective, and if we keep things in the right perspective and we understand that, you know what, we're going to have failures, we're going to get stuck in different places that we don't want to be, don't have that unrealistic expectation. Okay, when new traders become married to whatever they feel they might deserve or what they should get out of something, that's trouble to begin with. And the value of a trade can only truly be measured, and you're going to hear this a lot, after a trade has been closed. So once a trade has been completely closed off, that's how you know how good that trade was. It drives me up the wall when people say, oh, this is an amazing trade. Well, no, the trade was what you took. It was a terrible trade. You lost this much. Well, I could have done this. Well, we could have done a lot of things. But the key is to make sure that we're getting realistic expectations and coming full circle on those and actually making them happen, bringing them to fruition. Anything else is simply unrealized opportunity. The next mistake to avoid is letting your hope, or in some situations greed, it sounds kind of weird that we're putting them on the same stand there, overrun your intuition. Intuition is one of those things where, once again, you can't go in and grab a box of intuition and upload it to your memory banks, and then be set, good to go, and up and running. Intuition is one of those things that you're going to get with time. Once again, there's ways to speed past certain things in the markets. There's certain things that you can actually get that other people have developed, and obviously we're in the market as a company. TradeWest is in the market to develop and offer opportunities and systems to help people with different elements of trading. If you guys are familiar with Mike Swanson, you very likely know that he is very based and grounded in money management. And money management really is the beginning. That's where it all really needs to start. Some of the systems that he has shoots people light years ahead in trading, saves them a lot of time and energy and lost blown accounts just because he has proven strategies and systems that help with that money management. Okay? For example, of course, many novice traders are abruptly eliminated from the Forex battlefield by not taking profits when their intuition says otherwise. If you got a feeling to take profit, don't let your ego get involved. And I think this is one of those things. My friend Bob that I was referring to, he says women make better traders than men. Sorry to say it, guys, but I've seen enough that I kind of think he's got a good point there, a good stance. There's something to say about guys when we get in there. We're tough. We've got this attitude like, hey, we're not going to let this trade that just got us. We're not going to let it get the best of us. So we're going to go back in there. We'll talk a little bit more about revenge trading in a little bit. Reversals in the markets come with little forewarning. And these reversals allow little time to correct your approach before all of your current profits are blown to smithereens. The key is to get comfortable with stacking up a series of profitable trades and holding on to them when the probability is in your favor. If things are going your way, then continue the ride. Continue things going. But you've got to be able to identify when things come back and they're not going to stay where you want them to. Don't be greedy. Don't let your ego get involved. Essentially, you have to be a robot when you're trading to some degree. Emotions are dangerous. Once you're comfortable with identifying the length of run in any given trade, you can then lengthen your reach for more profits. It's pretty simple, guys. Next one I want to talk about is overtrading. How many of you have already, in the amount of time that you've done this, how many of you have noticed that you've overtraded? You've gone too far. I'm looking for responses in the chat box here and make sure that everybody's following what we're going through here. Okay, we've got some people that says every day. So if you're overtrading every day, then chances are you need to probably freshen things up. You got to take a break. You want to be. Cindy says, "Oh yes, yeah." I haven't known anybody to do it every day, but I got to tell you, it's definitely dangerous. When we get too stuck in what we're doing and have this feeling like I just can't get out, it's going to happen, or maybe we jump into a trade. And this is a pretty common one. People will get into a trade and they'll get stuck in that trade thinking, okay, well, I can't go to bed until I really pull out of this trade. Well, you know what? Sometimes you need to do that. You can't. The beauty of trading is the ability for retail traders to actually kick back, pull out an iPad or a tablet or something, be able to trade from just about anywhere, any place that you've got an internet connection. That's the great part about the lifestyle of traders. You can be retired and have a significant income after retirement. You can do so many different things, and it makes things very nice. So don't let it overrun your lifestyle and what you're doing. Make it fit within your lifestyle. So don't overtrade, whether it be too late at night or you feel like you have to kind of stay in there until it does something. Don't let it run your life. For some new traders, it may be the challenge. For others, the thrill. Some people they love that challenge of getting in there and they're going to do whatever they have to. For others, it's the thrill of the market moves. Just keeps them coming back for more. One little thing, they're looking for a spike. Just don't overtrade. It's not productive. The danger in digging digging in for the long haul in any given trading session is you might make the mistake of overtrading. Overtrading can happen with little intent to stay in the game. You might not really think, well, I plan on doing that. I want to do that. When trading, we tend to rely on rules that we rarely entirely follow, and that's the other part of it. That's another mistake right there is if you've got a set of rules and you've got a strategy, whether it feels like the market's going to cooperate with your strategy or not, you follow that strategy. If it's a solid enough strategy, then you stick to it every time. Statistics are going to show that you're going to do better over time if you do follow it. This, of course, leads us to what I would call the blame game. How many of you done that where you're looking for someone to kind of point a finger at? We have to find someone or something that can carry the blame of failure. This kicks right back into the same arena as the ego. You know, when things don't pan out the way that we had hoped to, before moving on, we often feel the need to pin the blame on something so we can just move. We can justify moving forward. It's like, okay, well, I can't get past this until I say this is what I did wrong. This is how it was. You know, sometimes, you know, that's one of those things that gets you caught kind of in the wrong mindset. It's important that we keep moving forward. Best way to avoid overtrading is to make sure that before we sit down in front of the computer or kick back on the couch with the tablet, we make sure that we are good to trade for a specified amount of time. Make sure that you have kind of set aside a certain time and that you're really not going to overextend that. Another thing that I find is there's a lot of people that say, well, you know, I get into trading and then my wife or my husband, you know, just they go nuts because I tune everything out. And, you know, there's nothing wrong necessarily with tuning things out, but if you're staying in it too long, you got to be able to identify that and make sure that you've set aside the time to be able to do it. One of the least effective approaches to trading is getting stuck in trades with the attitude of holding the trade until the exit you were hoping for presents itself. Overtrading is staying in the charts beyond what we could define as our effectiveness. So, and I know that you've sensed that, you can feel that, you can tell when you're effective, when you're not, but we're much better off making the determination our senses are dimming and call it a day than make the mistake of overtrading. Learn when you're capable of your A game. That's one of those things that you just have to kind of get an understanding or a feel for when you're trading. Don't, if you find drool on your computer because you fell asleep and you wake up to a fan in your ear, there's probably a problem. Emotional control. This is huge, of course, and I'm sure everyone here has already heard about the emotional side of trading. Some of the first lessons that I picked up from Mike was that, and you hear everybody talking about emotions. This is the most easily stated, but probably the most difficult to actually fulfill and do of all of the different trading mistakes that people make. If we look closely at what a currency or money means to us, we can very quickly acknowledge that we are very emotional. We're emotional beings. That's all there is to it. When we see money or a digital representation of money, let's say looking at a chart, you see something in your account, you've got that number that you're staring at there, we immediately place a given value to that money and almost without consideration associate it with what degree of effort it takes to actually acquire that amount of money. So we're very quick. Now I actually have had different people that I've had different people tell me recently that people in the United States and the USA, they say that more than anywhere in the world, that's something that we do. And out of curiosity, just to find out where everybody's from, make sure that I've got everybody's attention and this is making sense, post in here, if you would, in the chat box, let us know where you're from. I'd like to kind of see where everybody's joining us from. Text in and let us know whereabouts you're joining us from, what part of the world. Because I know we've got people from all over, and this is kind of a difficult time because sometimes we still miss people in Australia if we go this early, and there's a lot of really good trading friends we've made in Australia. So it looks like I see a lot of U.S., Berks, UK, British Columbia, U.S., Nigeria, Arizona, Florida, There's a few. There's a lot in California. A lot of people in California. British Columbia, Canada. We've got a couple in Brazil. Very cool. Lived in Brazil for a couple years. Okay. Awesome. Indiana. So it looks like the majority of us are. So Sweden. I'm going to pick on. I'm going to pick on some of you guys that are in the States, but I think there's some truth to it. Czech Republic. Good to have you with us, Bob. Guys, this is we've got a good, and thank you, everybody's still filling in answers here. So we've got a good group with us from all over, but I think it's true. I think for the most part in the States we might have, we always talk about things in the dollar amount of value of something, but it doesn't matter where you're at in the world, we associate that money so closely to the efforts it took and what we've done, and there's a certain level of entitlement when money's involved and kind of what we've done because it's ours, we earned it, we fought for it, and so it's interesting. This is a pretty difficult one to overcome, and I'll be the first to tell you that I'm not there yet. I haven't overcome the emotional involvement in trading, and I can tell the days that it affects me. So this makes one of the most dangerous Forex landmines very difficult to detect and avoid, as if it were hardwired into us. And it really is. It's one of those things where it's like, man, it's such a since we're little children, it's something that's so just second nature to us. That's how we think and that's how we respond. Emotions are more of a liability, clouding our judgment as opposed to enhancing it. So how does one detach, as they say, from their emotions? Well, we first have to understand why our emotions are so dangerous before we're willing to make the paradigm shift and convince ourselves it truly is necessary. It's uncomfortable, guys. We don't want to detach. We don't want to say, oh, okay, because, man, we put that money in there. But what's interesting is if someone can disassociate that amount of money that they've placed in there, and they can kind of associate the money with the opportunity and look at it from a financial standpoint without all the emotions becoming involved, then we can make cool, calculated decisions based off of our strategy, based off of statistics, based off of testing that we've done. And this is all, this is all things that we're going to, these are all things that we're really going to kind of take one step at a time. It doesn't come overnight. So you've got some different emotions here with this guy. So when we approach trading, we have numerous decisions to make before we trade, before we even get to choose buy or sell. Before we even get to that point where we get to click one another, we've got to have a lot of decisions to make. We've got to have a lot of different things figured out. Some people have the opinion, well, all that really matters is my exit, so I can get in wherever. Well, no. I mean, you have to make sure that you have a solid entry and then a solid exit. And then, you know what, if you're really trying to maximize what you're doing, you're going to be probably scaling in and out. And that's something else that we'll talk about a little bit more when we get into the charts and MetaTrader. But taking a position in a smaller percentage of what you were choosing in your lot size, okay, as we talked about in the first one, lot size, making that determination as to how much, when you're going to get in, at what point, how vested are you going to be in any given trade. So we need to, of course, have a plan of action that we're going to follow, or a strategy at least that we're ready to execute. And emotions tell us to make miscalculated decisions based on feelings as opposed to statistically established and tested techniques. And to continue on this, and I want you guys to think really closely here, these techniques and things, they've been proven by somebody, or they've been tested by someone else. We need to be willing to have enough faith that what they did is solid enough to move forward and use it. They're there because they've had that kind of success, and of course that gets into the point where, well, how do you know if someone else's strategy is going to work for you, or how do you know if, well, you kind of have to get to know the people that are making the product. I enjoy when we see someone that reach out to us and they try and get a feel for us. They get to know us and kind of our trading styles and strategies, and that gives them probably more information than anything else about if it's going to work with their strategy or their personality. Unrealistic expectations, we talked about this a little bit before, but there's several other trading mistakes that should be avoided. There's a lot of different things that really you just, if you can control it, if you can actually sidestep it, if you can detect the different problems before they happen, you're going to be so much better off. Over-leveraging. Over-leveraging is it's a big problem. Who in here is, when you first got started trading, the very, very beginning of when you really got started trading, who in here made the very easy mistake of over-leveraging their account? I got someone that says it took a couple months of doing it. Okay. Okay, we've got some people that it looks like for the most part everybody's had a little bit of experience doing it, but it hasn't become a habit. So that's excellent. That's actually good to hear. I was expecting a little bit more of everybody having over-leveraged at some point or another. David says blown up account. Yes. So that's really what happens, right? If you really, to the extreme, if you over-leverage, you're either getting a margin call or you're blowing the account away. Here's another very common mistake: not having a trading plan. David says, "Boom." Yep, it's not very difficult to do. It's not hard to do. And if you don't have a trading plan, it's kind of like going into battle without any strategy or any idea. It's like if you don't have it figured out, then the market is going to throw you back and forth like there's no tomorrow. You're not going to know which way is up. Another trading mistake that a lot of people make, and this is, for some people it's a bigger issue than others, but trading without patience. You know, if you're going into it with a solid trading plan and you say, and this is one of the first decisions you need to make, is, am I going to trade short term? Am I going to trade, am I going to trade intraday? Am I going to trade, long term? Am I going to go like into a position trade and just hold it for a certain amount of time? If we've got a sound strategy and we have sound money management and trade management, then all of this stuff kind of falls into place, and there's less decisions that we have to make in order to be able to do that. Trading without patience it's a big one. Trading without stop loss and tools in place. So we're not saying that you can't trade without a stop loss. It's one of those things where we've taught in the past how you can go in and trade without a stop loss. We actually have workshops where we've gone in and explained it. Mike's done an excellent job in one of our workshops explaining specifically how to go in and trade without stop losses and do very well. And I mean really well. There's really a lot of opportunity if you gain that skill set, but it definitely is something that you have to learn. And you've got to have patience, because sometimes when you're trading without a stop loss, if you're making right decisions, sometimes you're maybe stuck in a trade, but make that decision beforehand, because once again, when we're over trading, we're making decisions that are really kind of based on, man, I'm really tired and I'm just kind of sick of this and I don't want to sit here and watch it, go in the direction it's going or do what it's doing. Then we find ourselves coming into problems. How many of you guys, and this one I've got to ask everybody, I want to see a response on this. How many of you have, and I'm sure it's a majority, how many of you have yet to kick revenge trading? And I'll even ask, what is revenge trading? What does that mean? Every day. I love it. Every day. So if it's so if you're still revenge trading, you could have a problem. There could be something that you want to get over. Revenge trading, everyone, is obviously it's pretty obvious. Revenge trading is you go in, you set yourself up, you sit down to make some trades, and you make a couple trades. Well, more often than not, it has something to do with maybe a little bit of greed, but more likely than not, it's got something to do with a little bit of ego. Okay, This is the guy that doesn't want to stop for directions, or potentially, and it's not just guys that do this, women do it too, but it's someone that doesn't want to stop for directions. There's someone that that is just going to get the markets back because they just lost a significant trade, and what do? Rather than cutting their losses and moving forward because maybe it's the end of their day for trading, they make the determination that they are going to stick it out. And they're going to go back in there, fists flying, enraged, ready to do whatever it takes. Revenge trading can be extremely dangerous when you let your ego and your emotions kick into it and you go back with a vengeance to gain back those pips that you just lost. Another big mistake that we see quite often is misunderstanding risk-reward. I know everybody's heard risk-reward ratio, but it's very important to understand what level of risk and what level of exposure you are putting yourself in compared to your potential reward. And once again, to go into a lot of detail, we have other workshops that do this, but this is huge. You have to know before making a trade, you have to really understand what your risk is going to be, comparatively speaking, to your reward. If you go into something that's a one-to-one risk-reward, you are in pretty dang good shape. You're in a good spot to be in. Because if you're, depending upon the system that you're trading and your strategy, if you're risking 10 times as much as what your reward is, you're in the wrong spot. There's something you definitely need to make some adjustments to your trade plan and what you're doing, because all it takes is a certain number of those, and as David says, boom, and you're running into problems. Another mistake that we see on a regular basis is letting the losers run. It's funny because I fell prey to this just the other day. I didn't do my research, and sometimes it's very easy to get kind of lazy, and it wasn't really a patience or anything else, but it was just a matter of kind of laziness. Sometimes we get lazy and we don't want to really analyze things the way we should and really look at it and dig into maybe price action or something else that's going to give us something a little bit more substantial to stand on. So letting your losers run can be very dangerous. Okay. We're at the point in the webinar where we want to just go through and see if there's any questions. If we can answer any questions, let us know. We definitely want to connect with anybody that has questions that weren't responded to or weren't answered. Please let us know. We do have support guys in here as well, but let us know if you have any questions. Or are there any questions before we talk about what we're going to go into in the next webinar? Okay. Now it looks like everybody's pretty good. So this of course was this was the end. This is the end of Module 2, trading mistakes. Keep in mind that when we jump into MetaTrader and we jump into the charts, we're going to go over a little bit more terminology, and we're going to talk a little bit more about mistakes, but just very briefly. So thank you again, you guys. We appreciate everybody joining us today. Once again, make sure that you don't miss our free webinar that we're going to have this next week. We're going to be digging into the MetaTrader charts. Of course, the focus will be MetaTrader 4. There's a lot of people with questions about what different trading platforms have to offer. Of course, there's a whole lot of them out there. We like to use MetaTrader 4 because of how universal it can be. And we'll go into and kind of explain why MetaTrader 4. We're also doing a good amount of things with MetaTrader 5. And when I say that, it's interesting because it seems like there's always a new build or a newer version of the platform for MetaTrader 4. They keep coming out with these new versions and builds. However, MetaTrader 5 has got some neat things. Doesn't mean that you have to trade MetaTrader 5. Even though it might not be mainstream yet, but it makes sense to take advantage of, take the best from anything that you can get. And we'll talk just briefly about MetaTrader 5. It's got some great testing abilities. Our focus, of course, will be MetaTrader 4. You guys have a great weekend. Thank you so much for being with us. Please feel free to give us to contact us. Our email, of course, info@tradewestforex.com, and our phone number is 801-436-7010. We want to make sure that any questions that you guys might have, we can answer for you, and we're gonna dig in a lot more to the trading side this next webinar. It'll probably be a little bit more exciting than going over some of the basic stuff. But once again, you got to start with the foundation. We appreciate you guys being with us. Thank you again, and have an awesome weekend.